Hey, it's Jake, and welcome back to my channel. In this video, I'm going to talk about a new investing paradigm that's emerging called ESG, and how it could affect value investors. So what is ESG? ESG stands for Environmental, Social, and Corporate Governance that promotes diverse investments into sustainability and societal impacts. Top global financial firms use financial statement as a guide to value the investment of a company, but now they're using ESG non-financial metrics as a tool or guidance to evaluate the investments. This is done by top global financial companies using the data provided by the third-party agencies to give risk scores based on how well the company complies with the ESG standards, and use the scores to evaluate the company's credit. Companies that fail to meet ESG standards will have difficulties in obtaining loans, investment funds due to poor credit scores. Therefore, low credit scores not only hinder the overall financial performance of the business, but also the image of the company, thus reduce the overall value of the company. It is expected that 70% of funds globally will be supporting ESG standards within 3 to 4 years, and top global financial firms such as Moody's and S&P are already using ESG ratings as a guide to evaluating the overall company's credit. Also, BlackRock stated that they will not be investing in a company that does not meet the ESG standards, as well as biggest tech company Apple also stated that they will stop doing business with the suppliers that fail to meet ESG standards. As you can see, it seems like companies have no choice but to follow the ESG, otherwise it's an uphill battle for the companies to gain capital access to expand their business. According to global financial and investment companies, the main objective of ESG is to create a better society by making investments in the business that supports ESG standards such as environmental protections, increase social responsibility, and create transparency and governance. But is it really for the society? In my opinion, this is another creative strategy by the US to remain its world reserve currency status by using its reserve currency status as an advantage to control the economic growth in China. Since China is a communist country with a heavy focus on manufacturing, which both goes against with the ESG standards, the US will use ESG standards as a regulation to control the capital flow in China. This video is not about expressing my political interest in what's wrong or right, but as an investor, we must be able to understand the big picture, such as political trends or monetary policy, to anticipate how it will affect the market in macro level to position our portfolio wisely to make profits. President Joe Biden's main political agenda is all about ESG standards, and I believe that the US will continue to use environmental protection, social responsibility, and transparency in governance as a justification to push ESG standards globally to control not just China, but anything that goes against what the US national interest. If you study American history, the US was founded with a strong pirate-like behavior, and that's how the US was evolved and accumulated its power over many centuries, by dominating anything that went against its national interests. Due to these political conflicts, I believe that stocks that are highly correlated to ESG will continue to thrive, along with the increase in the inflation rate. Personally, I am highly bullish on Tesla, Beyond Meat, MP Materials, and watching very closely on Brookfield Renewable Partners, Next Era Energy for solar. Also, I suspect that FANG stocks will continue to go up because FANG stocks make up the most holdings for the top ESG funds currently. If you're not confident in active investing from picking your own stocks, then you should consider investing in ETFs to have all exposures in the ESG trends. This trend doesn't seem like it's going away anytime soon, considering the Fed stands on high inflation target rate with a low interest rate and continuously printing more money to give out stimulus package, which will end up creating the bubble that we saw in early 2000 and 2008. I believe that the stock market will continue to increase, but it cannot go on forever. It will eventually end when the Fed decides to hike the interest rate, and that's when everything will start to crumble and fall, but no one knows when that will happen. Will you just wait on the sideline and watch stocks to go up, or jump in the trend, or are you currently in the market? Please leave a comment below with your thoughts, and if you like this kind of video, please give it a like and consider subscribing, and see you in my next video.